welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me Shail Bhatnagar. Well, at the start of the week, the Nifty did fall about 200 points from the highs of the day and ended below the flat line. This was despite the banks and the IT stocks continuing to contribute to the gains on trade. But a whole host of other stocks had mitigated those gains as well in trade. So, stocks within the metals pack, for instance, the auto pack, these were the stocks that were dragging. Even the pharma stocks and the FMCG stocks were seen in weakness, and therefore the markets did slip below the flat line at 24,141. The Nifty Bank, however, managed to end higher by about 0.6% in trade at 51,876. It remained as the outperformer in Monday's trading session, witnessing gains of over 300 points, but it could not sustain above that 52,000 mark yet again because it corrected about 300 points from the day's high as well. The index as a whole traded in almost a 1,000 point range as well. But as far as the Nifty bulls are concerned, they yet again struggled to find confidence at the higher levels, and the result was a close below the flat line. Remains to be seen how we pan out the rest of the week. Of course, there will be earnings to react to, and there will be also further macro data in terms of inflation and the IIP data that the markets will be now keenly watching out for. Good morning, Shail.
गुड मॉर्निंग लेडीज एंड जेंटलमैन, इट्स अ फाइन ट्यूसडे। मंगलवार है, उम्मीद करते हैं कि मंगल ही होगा। आपके सामने निफ्टी का चार्ट प्रस्तुत करते हैं। वॉल स्ट्रीट में बहुत ज़बरदस्त मोमेंटम, S&P पहली बार 6000 के आपको पार होता हुआ दिखा। काफ़ी सारे जो पॉजिटिव्स हैं वो आपके सामने मैं पहले बताता हूँ। सबसे पहले ख़ासकर क्रूड ऑयल, यहाँ पर लगभग 1.2% की गिरावट है। दिस इज़ वेरी गुड न्यूज़ फॉर Indian equities, and given the fact that Wall Street has shown remarkable resilience, there is this Trump trade that is going on. Tesla has added another 9% to its rally, and of course you have a strong show on the Nasdaq, a record high. We'll get all those details from Sakshi, but two very positive things are overseas cues in the form of a strong close on Wall Street, and of course crude oil prices dipping 1.2%. These are two positives as far as Indian equities are concerned. Now let's look at the chart of the Nifty. Most likely you will see Nifty and Nifty Bank consolidating today for the reasons that I have mentioned earlier. Look at the Nifty, it's sloping downwards, which essentially means that all moving averages above it are refusing to let the Nifty rise above 21 EMA, above 10 EMA, above 100 EMA. They are providing a very strong resistance, and that is also strengthening the hands of the most important call writers at 24,400, 24,300, 24,200, which essentially means no matter how hard the Nifty tries intraday to go up on whatever little news that we can manage on the positive side, heavy selling pressure again pushes it lower. What is helping the Nifty on its way up? It's the Nifty IT index, which rose substantially 5.4%, 540 points yesterday, and last week it had added about 1400 points. So that rally continues. Again, that's a Trump trade in the making. People are hoping that a probable tax cut for corporate America will prompt Fortune 500 companies, which are the main customers for Indian IT shares, to open their purse strings and start spending on technology. Let us see that happens or not. But the hope trade is always there. Strong set of earnings by both private and public sector banks is emboldening Bank Nifty, and both these components are the highest weighted stocks in the Nifty. Therefore, the bottom side is protected on the Nifty because IT and banking is strong, but heavy selling pressure. The Reliance is one of the weakest counters with the heaviest weight, the second heaviest weight in the index. Is now 23% off its all-time high. So that is providing the reason for selling pressure, and of course heavy call writing. Now, what is likely to happen? One of the most negative factors is the dollar index, up 0.5% at 105. The chart shows that now it is at early July highs, and a strong dollar index essentially means weakness in silver and gold, which is apparent in their prices. So two positives, which is strong overseas close on Wall Street, a very strong set of data coming in from crude oil, and of course the negative is the dollar index. Now, what are the other data that we are looking for? There is a change in timing for release of CPI for October and IIP data for August. Instead of 5:30 p.m., we will now have it closer to the market close at 4 p.m. We'll keep an eye out on that one. And of course, two major earnings. Hindalco, profit for the second quarter rose 123%, mainly because of other income. And of course, revenue rose about 8% to 22,262 crores. Keep an eye out on Hindalco. The counter is at 200 DMA. This is looking good on the long side. And a little known company, Ramco Cements. It's come up with a very strong set of numbers. Again, the stock has been one of the few outperformers that are there in the market. We'll keep an eye out on Ramco Cements as well. Let me just share the numbers with you as far as Ramco is concerned. You've seen profit after tax slip about 64%. We'll keep an eye out on this one as well. And Britannia, while margins have slipped, there is a slight dip in profit, but what has improved is volume. It was supposed to rise between 8 and 9%. It's up 8%. So these are the three stocks that I have in mind: Hindalco, Ramco Cements, and of course Britannia. Sakshi, what are our foreign friends doing? Are they continuing selling because of the strength in the US dollar? And how has Wall Street closed?
Absolutely, Shail. So 31st consecutive session of sell-off from the FIIs. What we've seen is that they've offloaded stocks worth about 2,306 odd crore rupees as of yesterday. The domestic institutional investors, however, have remained buyers for the sixth straight session. They bought stocks worth about 2,026 odd crore rupees right there. When we talk about the US markets, you rightly pointed out, S&P 500 closed above the 6,000 mark for the very first time. It had hit that mark in intraday session as of overnight Monday session as well, on Friday session as well. Let me look at the key levels now as far as S&P 500 index is concerned. That closed marginally higher by 0.09% up. Nasdaq, of course, 0.06% higher in trade, but the Dow Jones is something that managed to pull up about 0.7% in trade. Now, of course, this is largely also to do with Tesla shares. Remember, that also jumped by 8.5%, continuing to provide support to the Nasdaq and the overall Wall Street index as well. We'll also keep an eye out on the cryptocurrency. The action is just not stopping there. Bitcoin is now nearing the $90,000 mark. It's already crossed the $87,000 mark. Yesterday was the first time when it had hit $81,000. So by the day, you are actually seeing very sharp, strong moves right from the Trump electoral victory came about. We did see Bitcoin rallying from $70,000 to all the way up to $87,000 in just the last few sessions as well. Oil, of course, as you pointed out, has held the biggest drop in 2 weeks on soft demand outlook in China, a stronger US dollar, and the concerns that the markets may flip to oversupply. WTI crude traded around $68 a barrel after falling more than 3% on Monday. Brent crude also slipped below $72 a barrel as well. We'll keep an eye out on that. Let's look at the Asian markets then. Remember, Japan's benchmarks outperformed in the Asian markets in the early morning trading session. The yen has continued to fall against the US unit. That is a concern, though. Kospi, however, slipped by 0.8%. Hang Seng down by over 1%. And the Chinese index also was down by about 0.2% as well. The gift Nifty is indicating to a flattish start at 24,252 odd levels for the benchmark index back home in India. Let's see how that plays out in trade. We look at a whole host of stocks that you should be looking at now. That's Hindalco. Novelis business does well after the Hindalco disappointment. Here the aluminium business has beat, backed by lower input costs as well as higher average aluminium prices as well. We've also seen that the copper business also beat expectations, which is also on the back of one-off, as the metal shipments were down 13% year on year. Aluminium EBITDA came in at 3,863 odd crore rupees. That's higher than the estimates. Copper EBITDA was up to 829 odd crore rupees, again higher than estimates right there. Britannia will keep an eye out on here. The net profit was down 9.5% to 531 odd crore rupees, lower than the expectations that the street had, of course. Revenue, however, inched higher by about 5.3% at 4,667 crores. That was largely in line with the street estimates of 4,697 odd crore rupees. EBITDA was down 10% at 783 crores, again lower than the expectations. Margins also narrowed to 16.8% from 19.7% last year. Again, this has been fallen short of expectations. So large parameters are actually below the estimates right there. Already in the last 1 week, Britannia is down by 3 odd percent. We'll see how the reaction comes in post earnings. ONGC, the net profit was up 34% to 11,984 crores. That's higher than the estimates that the street had. Revenue slipped by about 4% to about 33,881 crores. But this has also come in higher than the estimates despite being lower on a year-on-year basis. EBITDA came in absolutely flat, 17,025 crores, marginally below the estimates. Margins at 50.3% versus 48.1%. They were higher, but they've come in almost in line or slightly lower than the expectations that the street had. Board has also recommended an interim dividend of 6 rupees per share, so keep an eye out on that too. NMDC, again, the revenue of 4,918 crores is higher than the estimates. EBITDA, margins and net profit, however, have come in below estimates. The gross margins contracted due to the higher expected stock adjustment. They sold older inventory as production was lower right there. The next quarter expectations from the management are better, as they have done price hikes that have been taken, and in Q3 that will be reflected in the Q3 numbers. Gross margins have come in at 86%, however, versus 90% last year. Board has also recommended 2:1 bonus as well. So we'll keep an eye out on NMDC. Bank of India came out with its earnings. Net profit has jumped 62% on a year-on-year basis to 2373 crores. The net interest income came up 4%. Gross NPA was lower. It improved to 4.4%. Net NPA also improved to 2.94% from 9.99% in June. Ramco Cements, as Shell has marked, good set of numbers coming in. Revenue at 2,038 crores, EBITDA of 312 crores, both higher than the estimates. Net profit at 25.6 crores. As against the expectations of a loss. So that is definitely going to be one parameter on which Ramco Cements shares will be reacting today. Margins came in again higher than the poll at 15.8%. Sales volume, however, were down 2.6% on a year-on-year basis. But this was again better than the expectation of a 5% decline on the volumes that were there. So on all the parameters, Ramco Cements has also performed well. Jubilant FoodWorks, Domino's parent company, has reported a consolidated net profit of 66.5 crores in comparison with 97 crores a year ago. Revenue has stood at 1954 crores as compared to 1368 crore rupees in the year ago period. Godfrey Phillips, the cigarette maker, has reported a 23% surge in its consolidated profit at 248 crores in the Q2 of FY25. What we've also seen is that the revenue from operations have come in at 1651 crores as against 1374 crore rupees that was reported in the year ago period as well. So those are some of the earnings that I'm looking at today, Shail.
Ladies and gentlemen, 8:48, and we are already joined by Mr. Gaurav Dua, Head of Capital Market Strategy at sharekhan.com. Namaste Gaurav ji, a very warm welcome. Mutual fund inflows continue to be strong and robust, now topping a record 25,000 crore rupees per month. Where do you think this money is going in? We don't see any respite coming in the market. Any intraday highs are being sold into, and that's painful for retail investors. How do you see sentiment on Dalal Street?
So yes, you have had a strong inflow in October also. Apart from SIP, if you add up everything, there was around 41,000 crores of domestic flows into equity market in October alone, and that's an extremely healthy number. So that is why you see, despite a very big outflow from the foreign institutions, close to 1.4 lakh crores, your Nifty is only down by 8-9%. I think that's a pretty good this thing support that we have got from the domestic market. Now you had same kind of outflow in March this in 2020, and you had seen markets had taken a hit of 25 to 28%. So obviously the strong inflows are helping absorb all the selling that we have seen from the FII. So that's one thing. Secondly, yes, the mood is not great, but if you see every year, Nifty does give a pullback of 8, 10, 12%. So this is nothing new. The listing pain is more because of the sharp pullbacks that we have seen in some of the spaces in the broader market, spaces like railway, defense, power, some of the FMCG stocks, consumer stocks, and markets have been very, this is punishing. Any weak quarterly numbers, the this impact on the stock price is very sharp. So I think that's where the pain is, and I think that pain is something which should go on. However, we believe that the bulk of the price damage in terms of the large cap stocks is done. You might have now some kind of a time wise consolidation there.
Gauraji, very good morning to you. Good to have you with us. Tell us, how are you really looking at a slew of earnings disappointment that are coming in on the D Street from heavyweight spaces? We've seen Asian Paints yesterday. Many others have also reported in earnings today. How are you looking at a Britannia, for instance, on that front? Because all of these sectors are clearly linked with the consumption space in India, and that seems to be in a bit of a problem right now, despite all the festivities, despite all the sales figures that we've been getting as headlines. There is an intrinsic problem that some of these consumer-oriented sectors are facing.
So, biggest this disappointment that we've seen in quarter two is number one, that the consumer spending has been weaker than the expectation. That is where you see most of the consumer stocks actually not doing well. Number two, there has been a asset quality issue, especially in case of NBFCs, and that is why you have seen most of the NBFCs actually slip and seen very strong kind of a selling this pressure. Number third, what we have seen is that government spending on the infrastructure has been low in the first half. That has led to the decline in the volume sales in case of cement, and some of the infrastructure companies also not doing so well. So these have been three weak points if you look at the quarter two results. And this has led to higher downgrades in the earning estimates as compared to any upgrades that we have seen. So this is a quarter after almost 2.5 years, 3 years, where you have a sharpest downgrade in the Nifty earning estimates for FY25 and this in 26. And this has come off the back of a weak quarter one, where the Nifty profit have grown by 4 to 4.5%. So you had two back-to-back uh, quarters of slower growth, and this has come on the back of a very smart kind of a rally that we've seen in this period from around 22,000 to 26,000 300 on Nifty. So obviously, I think this pullback is something which should not be surprising.
Sorry.
Gaurav, if you look at the pain points that are there in the market, they are mainly because of earnings that have not come according to street's expectations. At what level would you suggest long-term investors look at Asian Paints? The stock was beaten black and blue yesterday, down about 8% after a terrible second quarter. What is, according to Sher Khan, a good zone where a small SIP can be placed in Asian Paints?
So, we have been cautious on the stock for some time now. Whenever you have an industry where some of the large players enter who've got deep pockets, they are going to create some kind of a transition pain. And that is what we had seen at one point of time in case of Airtel, and it took Airtel years to come out of it. So we don't want to be in a hurry to basically enter these stocks. Whereas on the other hand, we see a lot of good large cap stocks which have come down by 18-20% from their peaks. And they have shown decent quarterly numbers. And that is where we believe that it's a very good opportunity to accumulate.
Gaurav how would you really look at the strong set of numbers that have actually come in from Ramco Cements today? On all the parameters, the company has actually posted good set of numbers. And overall, what is your outlook on the cement sector? There is a lot of mergers and acquisitions that's taking place. Competition is rising as well. How are you looking at such mid-cap names?
So, most of the mid-cap names in the space have actually done well because of all this buzz that you have heard about the M&A part. So I think that's what has driven the valuation of some of these mid-cap stocks beyond their fair value. So we don't find any interesting stock in the cement space. Especially especially in smaller companies. So what we are doing is we are sticking to Ultratech. Ultratech is showing fairly good numbers. Valuations have also come down, so we are like sticking to Ultratech in the space, and we would want to see some a sense of stability in the space before we start buying the second tier company. In the past, we have seen about a year back, most of these companies tried to take a price hike. Volume growth was also there, but price hike did not get absorbed. More than that, a lot of new this thing capacities are going to come in next year or 2 year. So you should not be it's a space where where you have to be extremely careful as of now.
Okay, 8:56, ladies and gentlemen. This is the view that is coming in the market. Gauravji, where do you think you should see support coming in from Nifty at current levels? 24,100, 24,000 is still with the bulls. With the selling pressure that we are seeing coming in from our foreign friends, and of course the weakness in second quarter earnings, where do you think Nifty will have a support?
So, Nifty has actually done a great job holding on to 23,700, 800 levels. And as long as those are intact, I don't think there should be an issue when it comes to the large cap stocks. In terms of the support, what we have seen that this IT has been giving extremely strong support to this Nifty. Along with now, you have seen that the banks have also started doing well, especially the same private sector banks. IT, I feel, could still surprise everyone. So if you look at what had happened in the last term of President Trump, when he had started putting some kind of import tariffs onto this thing, China, what had they done? China, as a this thing response, had gone ahead and let the yuan depreciate against the dollar to basically take out the impact of the tariff hikes. Now, because of that, you had seen rupee also go down, because if you want to stay competitive, RBI will have to let the rupee also fall. So if that is the scenario which is going to play out again in this term, then stocks in the space which are exporting, especially IT services, especially some of the stocks in the pharma space, I think that's the spaces which could actually benefit from the global environment.
Okay. 8:58 right now, 2 minutes to pre-open right now. Let's understand from you, Gauravji, when it comes to the broader markets, how are you strategizing your moves there? After the recent correction, are you really looking at some of the spaces that have started to look positive and attractive, or is there some more downside to further being seen right now?
So, few weeks back, we did come out with a stock list where we asked our clients to start buying those stocks in a 6 to 8 weeks kind of a weekly SIP mode. And
Okay.
I think those stocks have a lot of potential for next 1.5 year, 2 year. I had
Okay.
also spoken of some of these stocks on your show a few weeks back. These stocks included State Bank of India, L&T, ICICI Bank, Indian Hotel kind of stocks, and I think that's where we see a lot of this thing value. And those stocks actually from that day are up by 6 to 8%, all of them.
Okay.
Okay, 9 a.m. ladies and gentlemen. Let's look at the market pre-open. It's a green tick. Let's welcome it on Tuesday. As I have said, Mangalwar hai to Mangal hoga hi. Let's look at the top performers. Britannia, 3.5% higher, 56.20. Will this continue? Only time will tell. But this is mainly on account of the volume that has come up dramatically. Let's look at what is on offer as far as Motilal Oswal, my apologies, as far as Hindalco is concerned. The stock reported a 123% jump in second quarter profit, and at the moment Hindalco is right there in front of you. It's trading 3.5% higher at 678. Strong set of earnings coming in from Hind Copper as well, 4% higher at 282, and NMDC. While volumes and margins sort of came below expectations, but the company announced a decent 2:1 bonus. Therefore, you see the counter up 6%. Now let's look at what the index heavyweights are doing. We'll start with the biggest one of them all, HDFC Bank, a strong 22 rupees higher at 1788. SBI is giving a lot of strength, 4 rupees 35 higher, 852. What is also in the green is TCS, almost 37 rupees higher, 36 rupees higher now, 4234. And of course you have strength coming in on Reliance, 3 rupees higher at 1276. What is pulling the Nifty lower? 41 rupees down on LNT, 3581. That is there on the charts. Slippages in Kotak Bank, nothing to be worried about. ICICI Bank is now 10 rupees higher. So a strong show as far as the index is concerned in the morning space in pre-open. Let's take a detour into NSE 500. Strong set of earnings, ONGC 265, 3% higher, but slipping crude oil prices will sort of keep it a bit under the lid. What else is moving in the green as far as the markets are concerned? Ramco Cement, as I had pointed out, the numbers, while slipping over the year ago and the quarter ago numbers, have been better than expectations, almost 5% higher, 912. Strong show by Triveni Turbine, 5 percentage points higher at 658. Britannia in the green. Tata Elxsi is buzzing with gains, 2.7% higher, 6700. Hindalco retains its space, as does NMDC. So this is how it's moving. Jubilant Foodworks, the numbers were pretty decent in terms of same store sales, 3.5% higher, 624. In terms of most active counters, there is strength coming in M&M, almost 0.7% higher. So it's a gap up of about 75-80 points. Will this continue? Only time will tell. Remember, the call writer at 24,200, 24,300 and 24,400 is a very, very insistent seller. It is not letting any spike go sold into. So that's a problem. Let us see how it goes. But it looks like a decent opening as far as markets are concerned. A quick one from you, Gauravji, on the auto space. Good, decent corrections coming in M&M, in Bajaj Auto. Given the festivities around us, what do you think would be a good pick from the auto stable?
So, M&M has been a stock which has been our top pick in the space, both from their corporate strategy level point of view, where they are now looking at not putting a lot of the cash flows which come from the auto business into the subsidiaries. Second is that the farm equipment business is basically expected to pick up. And then valuation wise also, we have a lot of comfort there. Second, what we'll go in for is, is this Tata Motors. That's where we believe that, you had a sharp decline in the stock. Valuations have become attractive now. We will still stay away from the this two-wheeler space, because if you don't have a decent kind of a demand pickup in the two-wheeler space in the festive season, then it puts a whole lot of question mark on all the expectation, and there is a high risk of further earning downgrades there. So we'll stick to this thing, Mahindra and Mahindra as our pick, followed by by this Tata Motors.
Okay, let's get in our other guest also on board. Osho Krishnan, Senior Research Analyst, Technicals and Derivatives at Angel One is now joining in. Warm welcome to you, Osho. Good to have you with us. Tell us, the pre-opening ticks are definitely higher, encouraging. Your own sense, will this sustain through the day as far as the Nifty is concerned? Or would you rather be with the outperforming Nifty Bank Index? And any two stock ideas?
Very good morning, Sakshi, Shail sir. Firstly, thank you for having me at the show. Well, now looking at the overall market sentiments that we are witnessing from the last three trading weeks, that market is in a very subdued note. There has been no major triggers or no major traction that can be seen in Nifty, or rather than in Bank Nifty. They are into a very strong consolidation zone, which can be seen as a continuation to a time-wise corrective phase. So for now, until Nifty crosses the zone of 24,500 on a closing basis with a decisive note, authoritative note, until that time, I expect that there can be range-bound movement where dips should be auguring well for the buyers, and on the higher end, the time it moves towards the zone of 24,400, 24,500, that is the level where one should lighten up their long position. So overall, my view is buy on dips, 24,000 is the immediate support, and on the higher levels, 24,400 to 500 is the resistance for Nifty. And I expect the same way to get carried forward in the coming period until we see a very strong decisive up move. Now coming to the two technical recommendations, then I have a two buy recommendation for the day. Firstly, from the auto company, Maruti is looking very positive to me. Yesterday we have seen a decent traction from the lows, and I expect that now there can be a decent gradual up move in this heavyweight counter. So Maruti is a buy pick for me, approximately around the same zone of 11,350 to 11,400 range. One should keep a stop loss around 11,280, and the target that I am expecting for a very short term, maybe intraday or maybe by one day, is 11,600 is the immediate target. But I am expecting an overall reversal in the trend of Maruti. The other counter which has given a consolidation breakout in the last trading session is United Spirit. United Spirit has seen a very decent traction, decent consolidation in the recent period, and again have seen a consolidation breakout. So I expect that there should be a continuity to the higher range in United Spirits. 1470, 1460 should be the zone where one should try to accumulate this counter. 1425 should be kept as a stop loss. And the immediate target will be the immediate swing high, which is approximately 1550 to 1560 kind of a zone.
Right. A very warm welcome to you, Osho. Two very good stocks that you've picked on the charts. Maruti, now somewhere in its early Feb lows, shows signs of consolidation towards the upside. And yes, a good one on United Spirits as well. Although you don't imbibe the product that United Spirits sells, but a small note here, Sakshi, 50,000 weddings in Delhi today.
Wow.
And this is the first day of the wedding season that starts, and I can tell you from personal experience that the product of United Spirits will be in very, very heavy demand from 5 p.m. today. So this is a good chart check and on ground situation that you will see in United Spirits from today onwards. The marriage season has started, and I believe 40 lakh marriages are due this season between November 12th, which is today, and December 15th. So spirits are reviving for United as well, and for the broader markets too. A quick view from you, Osho, on maybe Tata Motors and L&T.
For Tata Motors, I expect that still the counter have not seen a kind of a decent reversal or consolidation for the timing. So it's better to stay sidelines in the counter. Although previously the zone of 780, 800 odd levels have provided some kind of a strong consolidation before the breakout that we have seen in the month of January. So I expect that from here onwards, if there can be a consolidation, if there would be a consolidation that can be seen on Tata Motors, then that should be auguring well for the buyers, and one should try to accumulate only for those buyers who have a short-term view. That means for short-term investors, that will be a very decent levels to accumulate. But still, one should wait for a consolidation and not should be very much hurry in accumulating the counter. The other one is L&T. L&T overall has seen a very strong traction. The counter has been consolidating at the higher levels. So I expect that there can be a decent move in the coming period. Overall, on the technical basis, it is forming a very bullish pattern. So I expect that from here onwards, if there will be any continuity above the zone of 3670, 3680, then that can be seen as a decent bullish setup for the counter. And I expect that in the coming period, it has a potential to retest the zone of 3800 also. So this counter looks more promising than Tata Motors for the on the technical perspective.
Okay, got that. Well, Gauravji, let me get you in. A lot of these sectors are pointing to a positive start today, including IT, metals, oil and gas, and several others, barring pharma, all of them in fact. But metals is something that I wanted to discuss with you. This is after the Adani Group has also now talked about their plans to enter into the metal space with a war chest of $5 billion right there. This is after 2 years after making their entry in the cement sector. Do you think there will be another shake-up that one could expect in the metal space as well? And over the next 3 to 5 years, where exactly should one be focused on within the metals pack?
Ferrous
Gaurav, we
metal
are unable
players.
to hear. Yeah, okay.
Okay, so if you look at the quarter one and quarter two earnings, the non-ferrous metal players have done extremely well.
Yeah.
Hindustan Copper, Vedanta, Hindalco. So I think that's the part of the this thing metal pack where you should focus on, especially in the copper space. If you look at all the industry estimates, in next 4 to 6 years, you'll start seeing a basically deficit in the supply demand for the copper especially. So copper is a space where we believe if you want to play it for 4 to 5, 6 years, it's where you'll make bulk of your money. So copper is where we are extremely positive in terms of the long-term investment.
Okay, 9:12, ladies and gentlemen. A quick one from you, Osho, on Hindalco. Strong set of earnings, profit up 123%, mainly boosted by other income in the second quarter. The stock is at 200 DMA. Do you expect a bounce, a sustained bounce on Hindalco?
See, overall, as we have mentioned, that the counter have is witnessing a kind of a rebound from the 200-day EMA on the technical time frame. And historically, if we will be seeing the technical charts of Hindalco, then every time it has tested the zone of 200-day EMA. From there onwards, we have seen a gradual up move in this counter. So, looking at the historical trend, I expect the same at the current juncture also. Even the technical parameters are extremely oversold, and such kind of rebound with historically proven to be a very strong support, I expect that there can be a decent up move in the coming period. On the higher end, the immediate resistance is approximately around the zone of 680 to 700. So that is a very stiff resistance for this counter. The time it surpasses it on a decisive manner, then we can see a continuation of the higher highs, higher lows pattern in Hindal.
Okay, got it. So that's as far as Hindalco is concerned. Let's look at a few more stocks which are actually looking to open in the green today. 2 minutes to opening trade, and we can see IT stocks again in the thick of trade after yesterday's strong move that we had seen across the board. Again, stocks like Coforge, which hit a record high yesterday, will be in focus. 1% higher. Emphasis about 1% higher. L&T Tech, LTI Mindtree, Persistent, TCS, Tech Mahindra, Wipro, HCL Tech, they all seem to be opening higher in trade. Osho, to you, would you stick with the mid-cap IT names again in trade today, or should one also focus on a mix of both large and mid-caps right now?
See, overall, there will be a mix of both the large and mid cap, because mid cap counters are on a breakout spree. They are having a very strong breakout. Companies like Coforge, Persistent, these companies are looking very positive on the technical front. They have given a fresh breakout on the daily time frame chart. Whereas companies like TCS, which has seen a strong reversal from the 200-day SMA, so I expect that one should have a mix of both from heavyweight also and from mid cap also, where we can see a decent movement in the coming period. Overall, there are many counters which are on the verge of breakout. For example, HCL Tech is on the verge of breakout. So the time we witnesses a breakout on this counter, then again we can see a rally of nearly 80 to 90 points in short term period. So IT counters are looking very positive, and one should stay stuck with the positions on the higher end. If there will be any kind of dip for the day, then that should be arguing very well for the buy.
Ladies and gentlemen, the markets are upon us. A 78-point uptick as far as the Nifty is concerned on Tuesday. Let's look at what is contributing this one. A strong show on Nifty Bank, 140 points higher. More importantly, Nifty 500 is already up 0.5%. This is the broadest measure that we have. 115 points higher. The IT index, third consecutive day of gains, 190 points higher. Okay. Let's start with the top gainers. Tata Motors, we've been talking about this since yesterday. 6.5 rupees higher, 811. Reliance, 7 rupees higher, 1279. Infosys, 9 rupees higher, 1869. ICICI Bank, 9 rupees 70 higher, 1278. HDFC Bank in the green, 85 paise higher. So this is all good. SBI, 3 rupees 55 higher, 851. So all banking stocks, Reliance and HDFC Bank plus IT stocks are in the green. This is looking good for the Nifty. In the initial phase, let us see what happens at 24,250. At the moment, 24,200 is back with the bulls. Let's focus on the earnings show. You have Hindalco 1.3% higher, 664. NMDC has slipped 2.8% lower at 226. Jubilant Foods is 5% higher, 633. ONGC 1.5% higher. Britannia has slipped 2 percentage points lower, 53.30. This is how the earnings boys have reacted in trade today. In terms of top gainers, Triveni Turbine taking it away, strong set of earnings, 7% higher, 688. You have Ramco Cement doing well, 3.5% higher, almost 900. And of course, you have stocks like RVNL, TVS Supply Chain, LIC Insurance, and UTI plus K Fintech from the financialization of asset space that are doing good in early morning trade. Coming to you, Osho, what would be your first move in the market as far as individual stock futures are concerned? Anything that looks exciting on the long or the short side?
See, there are many counters which are looking very positive to me. Firstly, Jubilant Food has given a fresh breakout and it is sustaining at a higher levels after the results. So I expect that from here onwards, there can be a strong continuation in this counter. But at current levels, one should stay sidelines. If there will be any dip towards 615, one should definitely try to accumulate this. Other counter is Zensar Tech from IT. Zensar Tech is looking very positive to me. This counter have seen a strong uh, development on the technical front in the recent period, and after that it had started gaining traction recently. Last trading session there has been a strong bullish candle formation and it is sustaining above that. So I expect that in the coming period 780 790 is the zone that one can see in Zinsar Tech. And even one from the defense space, HAL is looking very positive to me. I am always bullish on this counter. So I expect that there can be a decent move in the coming period. Yesterday it has given a very strong movement, and in today's intraday perspective, if there will be any kind of dip towards 4420 or 4400 odd levels, then that should be arguing very well for the buyers. And I expect that it is on the verge of giving a sloping trend line breakout. So the time it breaches the zone of 4480 on the higher end, we can see a very strong spurt in the coming period.
Okay, got that. So we'll keep an eye out on HAL above 44.80. It could be actually giving you a sharp bounce going forward from here. Gaurav, let's get you to talk about one of the counters that's again finding space in among the top 5 movers, and that is Trent. 1.5% higher, 65.75. It's been coming back, into shape after the recent consolidation that has played out. Is this the right time to continue to build on our trend for those who've been looking at accumulating this stock for their long-term portfolio? It's been a wonderful 2024 so far for Trent and for its investors thus far. But do you think going forward as well, this is one stock that should not be missed?
So yeah, Trent is an excellent business, but perhaps not at the right price. So if you are buying into Trent, yes, it will give you a steady kind of compounding gains from here. If that's your expectation, yes, you can go and just accumulate the stock. it is down from its peak, and it does give you an this thing opportunity. And but this is now from here going to be a steady 15 to 18% kind of a growth stock.
Okay, so that's as far as trend is concerned. 1.7% higher, 65.90 right now. We'll keep an eye out on that. Viewers, barring FMCG and auto, rest all of the sectors are up today. It's the realty pack that's now moving very, very sharply. 1% higher for the real estate index. Macro tech developers is up 2%. You have Brigade, Raymond, Oberoi Realty, Phoenix Mills, DLF, all of them nearly percent to almost 2% higher in trade. That's the kind of move that we are seeing right there. Osho, how are you looking at the real estate pack right now? Is this the space to be at in today?
See, overall for the day, yes, one can definitely go with the recent traction that we can see we are witnessing for the day for now. But overall, the trend in real estate is not very much promising on the broader term time frame. For short term or for intraday, yes, if they are providing a decent movement, then one can definitely try to gauge momentum and book their profits in the day only. For example, macro tech is looking very positive. It is at a cluster of its moving averages, consolidating in a very tight range from the zone of 1170 towards the zone of 1220 odd levels. And I expect the time it reaches the zone of 1220, then again 40 point of higher movement can be seen in macro tech. So one can definitely try to gauge such kind of momentum in the reality space for the day.
Ladies and gentlemen, I think an interesting stock to look at will be Tech Mahindra. This is showing all signs of good uptick and has appreciated in the recent past as well. Coming to you, Osho, what are the charts of Tech Mahindra telling you? Just up 0.1% today, but the charts look fairly decent. What are they telling you?
See, overall, as you have mentioned, this counter looks fairly positive as of now, but it is having a very strong resistance around the zone of 1720. So, till the time it surpasses the zone of 1720, there can be a kind of a consolidation, because before a breakout, it might see some kind of congestion over here. But above 1720, one can definitely try to gauge momentum in this counter for higher target of nearly 45 to 50 kind of higher movement for short-term perspective. So technical charts are looking very positive for the day, and for a longer duration, that means for medium-term time frame, definitely a buy on a higher end. Approximately 1820 should be the target if one is buying around the same zone, around the current levels.
Okay, ladies and gentlemen, let's look into the broader markets. We've started on a strong footing. 1450 shares are in the green versus 700 that are in the red. So it's an easy 2:1 advance decline favoring the bulls. How long it continues, only time will tell. 24,200 has been taken back by the bears as far as the Nifty is concerned. We track 19 indices for you. 17 of them are in the green, led by the realty space. You have a strong show which is coming into the media space. The mid cap 100 index is up 0.6%. The small cap index is also up 0.6%. The advanced decline in the NSE 500 is 350 shares to 150 declines. Overall, it is a good show, but will this continue? Only time will tell, because the call writers at 24,200, 24,300 are again putting pressure on the main index. Anything that I would like to mark? Yes, Newland Labs, 8% higher, 14,903. Jubilant Foods is now consolidating sharply, 7.5% higher after strong second quarter performance, 647. Good luck. This is a steel maker. They make steel tubes. This is also doing pretty well as far as charts are concerned after its earnings. And among the top names in the frontline space, you have UPL, again earnings led, 4.5% higher at 538. These are the early winners on Tuesday. Let's look at stocks that are in pain, and there are so many of them. Which ones would I like to mark? Juniper Networks, 3.5% lower, 321. You have Jackson's Pharma, 3.5% lower. NMDC is in pain, 3.3% lower. and Borosil Renewables 3.5% lower, 485. This is the broader structure of the market. 24,200 on the Nifty, 52,000 almost on Nifty Bank, and strength in the IT index. Sakshi.
The mid and the small caps are also doing well. You have a lot of stocks that are actually inching up. You have RVNL, that's up 2.5% from the railways pack. PB Fintech is up by 2.4%. HPCL is also up. BSE, Tata Elxsi, Paytm is also higher by about 1.5%. Then you have FACT, SJVN, Mazagon Dock also about 1.5% higher in trade. A slew of these stocks that are actually pulling up in trade after yesterday's sharp beating that we saw across the broader markets in trade. Even within the small caps, let's look at a whole host of stocks. Triveni Turbine is up 9% in trade. That's a very strong move. You have data patterns for Source Solutions, IFCI, Natco Pharma, Jyoti Labs, HFCL, a whole host of various sectors that are actually pulling up in trade. So let's do one thing. We'll discuss the railways pack with Osho first. Railways, Osho, anything that you would like to really look at in the bounce that we are seeing within the railway pack? What looks positive to you, or would you still want to stay away from this part?
See, overall, there is a very range-bound kind of a movement that we are witnessing in major of the railway counters. So, in the last 3 days, it has attempted to give in a breakout, stock like RVNL has given a breakout, tried to give a breakout, but again has plunged down to the lower zone. So, I would rather wait for a authoritative breakout above the zone of 490 kind of a zone for RVNL, and then only one can go for a long accumulation for short to medium term time frame. Currently, the market is uncertain for me. I expect that there can be a range bound movement, or the higher levels uh, can give a very indecisive picture for the time being. So better not to get carried away with any kind of bounce in the market. If there will be any kind of sustainability at the higher levels, then one should try to accumulate. Even at the higher levels, that will be perfectly fine. But one should wait for a decisive breakout and a follow up movement in major of the railway counters.
Okay, but would you want to track this Triveni Turbine after this 9% surge? Would you chase it?
See, overall, Triveni Turbine has seen a kind of a reversal from the very strong consolidation of 200-day EMA. But I expect that there can be a decent movement in the coming period. So one should better wait for some kind of correction. And once there will be any kind of dip towards the zone of, let's say, 650, 640 odd levels, then for fresh accumulation, one can definitely try to accumulate. But for the time being, if someone is holding the position, then better hold it for a short to medium term time.
Okay. What we'll do is we'll wait for the first 40-45 minutes of market to lapse. Generally, what is seen is that you have an initial burst, a gap up, and then that gap up is sold. So, stocks that need to be purchased maybe should be looked at about 10 a.m. Rather than at 9:20, 9:30, because the initial retail investors get in early with little or no experience, and then the stock sort of plummets after maybe 40-45 minutes have lapsed. Okay, record highs. Federal Bank, we discussed it yesterday as well, 207.80. This is a slow overachiever, low beta counter, but is a consistent performer. Coforge, something that we've marked earlier. HCL Tech, that Osho just talked about, 1876. And of course, Fortis, 4.5% higher at 654. The entire hospital space is buzzing with gains post the earnings that came in for Apollo Hospitals, and Fortis is no exception. Volume buzzers, a little known stock, TVS Supply Chain Solutions. This is a recently listed company trading fairly close to its IPO price, and is now quoting 3.5% higher. Let me see how the charts are placed. I'll request Gauravji to comment on TVS Supply Chain Solutions if he tracks it. Nice small cap stock at 190 rupees. Gauravji, do you have it on your radar?
Unfortunately, we don't track it, and this is a group company was the investment banker, so I will not be able to comment on it.
Fair point. Osho, what are the charts of TVS supply chain telling you?
See, overall, there is a very bullish breakout or very bullish setup is being made in this counter. This counter has seen a very steep correction from the zone of 215 towards 175, and in the recent 2 to 3 trading weeks have started gaining traction also. And overall, the sentiment is bullish because it has given one a sloping trend line breakout, and today it has also provided a consolidation breakout on the daily time frame that is being backed by volumes in the early 15 minutes. So I expect that there can be a strong continuity to this counter. But on the safer side, one should wait for the zone of 195 to get breached because multiple times it has tested the zone of 195.96 and again have reversed from those levels. So one should wait for 195 to get breached on a decisive manner, then can definitely accumulate. It will be also a kind of cup and handle pattern on a very hourly chart kind of a formation, so that will be providing a much more bullish stance in this counter. So I expect 195 to 196 will be the zone where one should try to accumulate. And on the higher end, again, 25 kind of higher movement can be seen.
Okay, got it.
Okay.
Gaurav ji?
The first 15 minutes have lapsed. Sakshi, just a moment. The first 15 minutes have lapsed as far as the Nifty is concerned. And we have a high of 24,242 that's been sold into. And it's the pivot for today, which is 24,160, which is acting as a support. Both the weekly and the daily pivots are here. So maybe, just maybe, if you are really, really aggressive, maybe the 24,150 call on the long side, but we'll take a look at it a little later. Sakshi, yours.
Gaurav ji, before we let you go, just could you highlight for us for the rest of FY25 any one or two sectors which you will be continuing to watch at and accumulate from here on? Any few stock ideas? You did mention SBI, L&T, ICICI and Indian Hotels as a continuous SIP strategy. If I have to ask you on the large cap space particularly, where would you be building on the positions?
So yes, if you are only looking at that 4 to 6 months, as I said, IT services, mix of large cap, mid cap. There will be some pharmaceutical stocks, especially on the CDMO space. LG just spoke about a couple of stocks, Newland Pharma. So in that space, there are many more stocks which you can look at. Then yes, we would be looking at the public sector banks because that's where you have not seen any asset quality issues. Valuations are also looking very, very attractive. So these are the three spaces where we believe that next 4 to 6 months, these spaces can outperform the market.
Okay, thank you so much, Gaurav ji, for being with us on this special edition, and hope you have a fantastic time till the time we meet you next time on air. And we hope the markets are only on their way up till the time we meet you next. Thank you so much for sparing your time and for giving us all of those insights. Osho, let's come back to the conversation within the F&O space and even within the sharp movers. Jubilant Foodworks, how would you really trade the stock after this 8% move today? Would you chase the momentum? Because the earnings have not been very exuberant, but it's been on a downtrend and therefore better than estimate earnings have actually lifted the sentiments today.
See, overall, Jubilant Food is at a very strong resistance now because there has been a very strong bearish gap around the zone of 650. So I won't be very much aggressive at current levels because although I was expecting that there can be a decent upsurge in this counter, but today the rally has been missed in this counter. So I will rather wait for some kind of consolidation or some kind of dip towards the zone of 620, 615 odd levels because in the previous period around in the early month of October, we have seen a decent consolidation around the zone of 620 odd levels. So now that should be acting as a very strong support for this counter. While on the higher end, 650, which is the bearish gap, should be the immediate resistance. So now the range is 620 to 650, and one should try to book their profits around 650 and again can re-enter in the trade around the zone of 620 for short-term perspective.
Okay, I think the star for the day would be Jubilant Foods, Sakshi. The volume has already crossed yesterday's traded volume. At the moment you have almost 246 crores worth of shares being traded on Jubilant Foods, and this is almost more than yesterday's volume. Let's just look at the daily chart of Jubilant Food. Yes, a very strong show that is coming in as far as prices are concerned. Okay, although it's sort of slipped from intraday high, which was somewhere like maybe 645, 653 actually. So this is how it is, ladies and gentlemen. Already about 40 lakh shares have been traded against an average of just 3 lakh shares. So this is an interesting stock to look at post earnings. Pizzas are being preferred. Sakshi, there was an interesting data that came into the earnings of Jubilant Food, which is that volume sales rose compared with people who came in to eat pizza. So essentially, people are ordering more pizza on Zomato than frequenting Jubilant Foods restaurants. So that's a good one. Let us see how it goes. But at 9:36, the Nifty has slipped now down to 24,150, as I was telling you in the morning. Sloping averages which are preventing the rise of the Nifty beyond the 21-day EMA, beyond the 10-day EMA, are now being taken advantage of by heavy call writers. 24,200, 24,300 just refuses to let go of the Nifty on the higher side. Sakshi.
Right, absolutely. 9:36. Let's look at what else can be discussed with the Osho right there. Osho, a slew of newer names entering the Nifty top 5 list. One from the telecom space, Bharti Airtel, is a percent higher now at 1577. And the second one is Sun Pharma, that's up by 1.1%. Telecom and Pharma space now looking good with some of the heavyweight counters pulling up in trade. How are you looking at the charts of Bharti Airtel after a long haul? It's coming back into four.
See, overall, Bharti Airtel, if we will be witnessing last 10 to 15 days of candlestick pattern, then it is very small body candle formation that has been seen in Bharti Airtel. So that means that the counter is not very much suggestive or very much gaining traction at current levels, but the only positive that we can see in this counter, that in the last 5 trading sessions the counter has been consolidating near the zone of 100-day exponential moving average, and it is forming a base kind of a situation at present. On technical parameters, majority of the technical parameters have cooled down from the overbought towards the oversold territory. So I expect that in the coming period there can be a decent traction, but for now there is no major traction that is being seen in Bharti Airtel for the time being. On the higher end, if it crosses the zone of 1600, 1610 on a closing basis, then we can see a gradual up move. Overall, the trend is very positive. The trend is still on a higher highs, higher lows kind of a situation on a broader time frame. So for long-term investor, or even for short-term investor, one can definitely stay put with their position. But fresh accumulation can only happen, should only happen above the zone of 1610. Now coming to the pharma company, Sun Pharma is again having a strong consolidation between the period, and Sun Pharma just being a very resilient on the fall. It is hovering around the zone of 1800 odd levels, which is a very strong support for the time being. So one should stay sidelines with this counter, and fresh accumulation is advisable only once it surpasses the zone of 1835 to 40 in the short term period on a closing basis. Then we can see a gradual up move in the coming period. Else there can be a consolidation near the zone of 1780 to 1850 odd kind of a levels.
Ladies and gentlemen, yesterday's close is now being tested, 24,140. We are just 20-25 minutes into the first hour of trade, and it's not looking good. What are the stocks that are causing Nifty to slip? Let's just take a look at that. It's sort of the selling pressure remains fairly high. HDFC Bank, 1 percentage point lower. You needn't look any further. ITC, Kotak, TCS and L&T. These are sort of causing pain to the Nifty. HDFC alone is contributing a 19-point dip on the Nifty. What's helping the Nifty on its way up? ICICI Bank 1 percentage point higher, Bharti Airtel 1 percentage point higher, Reliance in the green, that's a big plus, Sun Pharma in the green, Osho just mentioned it. So this is how it is, ladies and gentlemen. ICICI plus Bharti together are contributing 39 points to Nifty's strong total, but it's sort of slipping and slipping lower. Anything that I'd like to mark on the long side? Not really, because you know what happens is that stocks start with a burst, and then around 10:30 or so, all the put writers come in. They take advantage of the bump up and then start writing puts on that one or start selling calls. So that's a bit of a pain. We'll just sort of try and pass Tuesday without taking a long call. Sakshi, what are you watching?
Well, Shail, at least half of the sectors have actually now slipped into the red. Nifty is absolutely flat right now. It's the real estate space, though, that continues to drive higher. Remember, we pointed out macro tech right in the early session. It was about 1.5% higher then. It's now up nearly 6%. Macro tech developers is the stock to watch. Osho, would you chase the momentum?
See, for the day, as I have mentioned, that the counter is having a very strong day, so one should definitely try to gauge momentum in this counter for the day. But overall, the technical structure is remain sidelined. So one, it has given a very strong movement towards above the zone of 1250. So that's a very positive sentiment associated to this counter. And from here onwards, there can be a potential higher movement towards the zone of 1265 to 70. So for next 20 kind of a points, one should not be very much aggressive in the counter. And for those who have taken positions, should start booking their profit and wait for a further dip towards the zone of 1220, 1230 odd levels. That will be the levels where one should try to again reaccumulate this counter for higher zone of 1270 kind of a zone for intraday. But for positional, if it sustains around the same zone, then in the coming period, we can see a gradual up move happening towards the zone of 1340 for short-term perspective.
Okay.
9:42, ladies and gentlemen. As I have said, we have some outperformance in the form of the pharma space, which is now really sharpening its focus on the long side. Look at Lupin, 1.9% higher, 21.24. Look at Sun, which has just been marked by Osho, 1.4% higher. The most highest beta of them all is Aurobindo Pharma. It's now negotiating its daily pivot at 1302. The charts on the 15-minute space are pretty good as far as Aurobindo Pharma is concerned. A nice swing trade in the making. Glenmark has slipped, but Ipca Labs 4.5% higher. Let's look at the pharma index as well. Pharma index is up 0.7%, and this is also showing signs of strength. Your top pick in the pharma space, apart from Sun, Osho, what are the charts of Aurobindo Pharma and Ipca Labs telling you?
See, for Oro Pharma, I expect that because of after a very huge fall, there should not be very much aggressive buying that can be seen in this counter. But for yes, the sentiments have turned extremely oversold. So that is a very bullish parameters that one can say, because the sentiments have turned into oversold terrain, and whenever such thing happens, market see a kind of a reversal. But for now, Oro Pharma is a falling knife. Better not to hold it. One should stay sidelines from Oro Pharma. If there will be any kind of consolidation near the zone of 1270, then we can see in the coming period that there can be a decent traction in this counter. But for the day, I would rather stay sidelines in Oro Pharma. But Ipca Labs, as you have mentioned, has been witnessing a decent consolidation in the recent period. So I expect that there can be a decent move in this counter, but one should rather wait for another 5 to 10 points of higher movement. The time it surpasses the zone of 1605, 1610, then we can see a gradual up move towards the zone of 1640, but that is on a positional point of view. For intraday, rather wait for some kind of further correction. 1560, 1550 should be the zone where one should try to accumulate, and 1600, 1605 is the zone where one should try to book their profits.
Okay, got it. Let's look at some other stocks that are on the bus then. We have within the PSUs which have now slipped 0.5%, only HPCL that's up by 1.1%, IOC, ONGC, and even the REC PFC counters that are managing to just stay up 0.25% higher. Remember, this was the space that was in sharp buzz yesterday. Osho, on REC PFC, after that strong buzz yesterday, things are lying low. How would you advise investors to really move on these two power financiers?
See, overall, PFC have seen a very decent traction in the last trading session. There has been a very strong bullish candle formation that has been backed by very strong volumes also. So I expect that there can be a kind of a reversal pattern that can be seen in this counter, and following this, REC will be having the same structure. But overall, PFC has a very strong resistance or can see a kind of consolidation near the zone of 480 to 490 odd levels. The time it surpasses the zone of 490, then we can see a gradual up move towards the zone of 540, and again can retest the higher levels also. But overall, this has made a very strong base in the last couple of trading weeks. So I expect that from here onwards, as a short-term investor or a medium-term investor, one should definitely start accumulating this counter for a higher targets of nearly 540 to 550.
Well, ladies and gentlemen, there is at least some movement in quality stocks which have been, how should I say, not really looked upon. Look at a breakout that's happening in UTI AMC. We are headed for a record high here, 1396 for us, and the counter is already up 7.4%. We'll have to drill down into the numbers that have come in from the breakup of AMFI data. I'm sure it's because of those numbers that some MNC stocks are doing well. Let's look at the entire space as far as the data for AMCs is concerned. It's a nice green tick everywhere. Aditya Birla Asset Management Company is up 3.5%. Both service providers for the mutual fund industry, CAMS services 2.3% higher, K Fintech 4% higher, are in top shape. Other listed AMCs such as NAM India 1.6% higher, 709, and of course you have a strong show coming into HDFC AMC as well. The top AMC of India, SBI Mutual Fund, is still not listed, but you can enjoy the bounce in SBI because it still is a wholly owned subsidiary there. Any favorites in the wealth management space, Osho, before we bid you goodbye?
See, overall, all these counters which you have taken name are into a very strong consolidation, and overall the trend is very bullish in these counters. But HDFC AMC, to be seen on the technical front, it is on the verge of giving a fresh breakout. So I expect that the time it surpasses the zone of 4500, we can see a decisive up move. This zone has even historically has provided a very strong resistance also. So I expect that we should wait for another 15-20 points and a sustenance above that. That will be very crucial. The time it goes beyond the zone of 4500, then there can be definitely a higher movement towards the zone of 4750 to 4800 on the short term period. And if it crosses or surpasses the same, then another 400 point of rally can be seen in the medium term perspective. So this counter is very positive on the technical fronts.
Okay.
Okay, ladies and gentlemen, what we'll do now is shift focus to the earnings for second quarter and present to you a very well-known management that has created a lot of wealth. Shortly, Mr. Ajay Patil, Chief Financial Officer at Cummins India, will be joining us. The second quarter was fantastic for this maker of gensets. 31% rise in sales year on year to 2,492 crores. Net profit surged even better, 37% to 451 crores in the second quarter versus 329 crores, and both sales and profit rose sequentially as well, that is over June 2024. If you look at Cummins as a stock, this has been one of the outshining examples of how the infrastructure boom has been captured by mutual funds, by PMS schemes, by retail investors. Over the last 5 years, Cummins is up 45% each year, and in the year to date, which is in the last 11 months, the counter has added 84%. We'll shortly be joined by Mr. Ajay Patil. Osho, before we let you go, would you have a comment on the chart of Cummins?
Cummins is again in a very strong consolidation zone. There has been no drastic movement that is being seen in this counter. So I expect that this can continue in the coming period. But overall, the technical structure indicates that the counter have taken support of the 200-day SMA, has made a higher low formation in the recent period. So we should wait for a higher high formation to be made. If it happens above the zone of 3750, 3760 odd levels, then we can see a continuation in the higher end. But for now, it is in a very strong consolidation zone, no sign of caution in this counter. So definitely a hold for this counter from short to medium term time.
Okay.
Right. Mr. Ajay Patil joins us, CFO at Cummins India. Namaste Patil Saab, a very warm welcome to you. And in all this gloom and doom, it's Cummins that has come up with a fantastic performance, 31% rise in sales and 37% rise in net profit. What is so good at Cummins which everybody else is missing out in corporate India?
Good morning, and to you as well as to all the viewers, and thank you for the kind words about our results. I think when you look at the quarterly results, it need to be put in perspective for one of our business called Power Gen, where there was a post pre-buy quarter same time last year, and therefore there was an expected growth in the Power Gen business, which did come along far stronger than what we possibly had seen. Second thing is our other two businesses, the industrial and domestic service business, both continued their strong growth momentum. So as a result, when you look at our results clearly from a quarter perspective, our domestic revenue was up 47%, and on a H1 basis, domestic revenue is up 28%. And exports, as we have been guiding in our previous commentary, we have seen continued softness. However, on a sequential basis, we are seeing some uptick in our exports. So when you put all of this together, you see the quarterly revenue up 31%, and on a YTD basis and 6-monthly basis at 16% overall at a Cummins India level.
Sakshi, this side, I want to understand on the margins front, sir. Could you tell us if there are any key reasons that you found out for this narrowing of the band by 400 basis points in this quarterly earnings? Was this a one-off? And going forward, what is the kind of expectation on the margin front that you have? What do you end FY25 with? If you have a guidance already in place, could you share with us, and any change on that as well that you could share with our viewers?
Absolutely. I think we haven't given any margin guidance, just to clarify that point. What we have given is a revenue guidance of a double-digit revenue growth for FY24-25. When you look at our quarterly results from a margin perspective, I think at a gross margin level, we had seen a decline on a sequential basis. However, as well as on a year-on-year basis, again, a function of what we call a mix as to how did the mix play out. But when you look at our profit before tax at 24.3% for the quarter, was up 150 basis points compared to same quarter last year, and was about 10 basis points lower than sequential quarter. And on a H1 basis, the profit before tax at 24.3% is up 350 basis points. So when you look at how we are executing, I think we continue to reiterate our stance of driving a profitable growth through a combination of factors. Obviously, growth is top of our mind in terms of how we continue to grow, and at the same time maintain a very disciplined and prudent cost management, helping us translate our growth into a profitable performance from a margin point of view.
Okay.
Mr. Patil, what would be the pricing change that will happen over the next 1 quarter or so? Because now the entire product line of Cummins has transitioned to the CPCB norms for the latest products. How do you see pricing change for the better in the next 6 months, and how will that impact operating margins?
Yeah, absolutely. I think what we have stated earlier, the CPCB 4 Plus norms were effective July 1st of 2023. However, the government provided an additional 1 year, and we got our products ready based on the original timeline. And accordingly, we were one of the first in the market with the full range, and we could then enjoy a certain amount of pricing position. Over the past months, I think all the industry players are progressively catching up. And we do believe that the price discovery phase of the new emissionized products will evolve in the coming quarter or two. And therefore, at this point of time, it is difficult to say as to what exactly the price position is going to be. However, we believe that given the head start that we got because of our product range was ready, we have managed to get our supply chain, our cost management in place to effectively continue to maintain or increase our overall margin profile.
Mr. Patil, you have also highlighted that the management is just cautiously optimistic on the near-term demand scenario. Why do you think this cautiousness is coming in? And do you think this will persist till the FY25 end? By when will you actually see the demand scenario improving? What are the key factors that the demand scenario is dependent on?
Absolutely. So the commentary had two dimensions to it. Purely from a domestic perspective, we do believe that the overall demand situation is fairly stable from a domestic end market point of view. However, from an exports point of view, we are seeing some sort of a mixed signal. So there are export markets which are showing some sequential growth rates, while some market continues to show the softness. And that's the reason the commentary came in from an overall company guidance point of view. Having said, we still reiterated our guidance for the full year at a double-digit revenue growth for FY24-25.
Mr. Patil, what has been the overall factory utilization at Cummins, and how do you see the Genesis factories working? If you can just give us a number of what is the capacity utilization at Genesis units?
Yeah, so if you look at overall genset level, we typically make the genset engines, and our capacity utilization from a manned capacity point of view is in excess of 90%. However, compared to our installed capacity, we are about 60% or thereabout, leaving us a significant headroom should the demand continues to grow or even grow stronger than what we have experienced. We seem to be well positioned from an overall manufacturing capacity point of view.
Okay. Before we thank you, Mr. Patil, one final question from my side. Do you see data centers business now growing over the next 2-4 quarters? Apparently, the demand from that business is rising dramatically for Cummins.
Yeah, absolutely. I think as we have stated possibly in our prior interactions also, I think we believe that data center is a multi-year growth opportunity. And from a Cummins point of view, we are well positioned because of our global experience as well as our India experience, where we have the right product and technology, which is tailored for this mission critical requirement of data center market. And we back that up with our world-class service to provide a very compelling value proposition to our customers. So in summary, we are very well positioned as the data center continues to show a strong growth for years to come.
Right. Mr. Patil, thank you so much for being with us on this special edition to share with us key insights from your earnings. All the very best for the upcoming quarters as well. Hoping to have you soon back on Business Today to detail for us the outlook going forward for the business. Thank you so much. With that, viewers, we've come to the end of this morning edition of Market Today. About a 75 point of an uptick can be seen on the Nifty. It's been volatile, but again, a very sharp uptick that you can actually see as we are winding up. 1.7% higher now for the real estate space. That's definitely definitely supporting the sentiments. Banking stocks are also really inching up higher, and private sector banks are supporting this move. You can see a 0.5% uptick on the Nifty Bank at 52,134 now. ICICI Bank, Axis Bank are the ones that are in fine shape, that are pulling up the markets. Let's see how it carries on throughout the rest of the trade. But do stay tuned. Business Today Television will continue to get you market insights from top market masters, as well as earnings insights from top managements who are joining in throughout the course of the day. Stay tuned.
Going by the past experience when he was president, it was a very positive experience. He's obviously very pro-industry. We as Aditya Birla Group are the largest investors from India and the US. We have about $15 billion